Good afternoon, fellow traders. Mark Abramsky from Forex, Undressed, Smart Signal Service, of course. We are looking at the last week of trading here, guys, and it's iffy at that, December 15th to the 19th, I wouldn't do anything more after that until about January the 5th, simply because of the lack of liquidity in the markets and the fact that, generally speaking, the markets can and will do anything. However, let's have a look at the correlating markets analysis, which is what we do every week anyway to start the week, and let's see what we see. We do see a nice bullish engulfing candle here on the euro, US dollar on the weekly chart. Does it mean an awful lot right now as a fact? Is the euro going to race all the way up to, 1.35 again? Not really. Other than the fact it bounced off of that key trend line, which has been in place since 2008, really, or even less than that. So, what does it mean? We may see obviously a bit of a reversal, choppy reversal in the US dollar index, as it comes down to sideways. Same thing with the euro as it goes up to sideways, for an extended period of time. Possibly moving as high as the 2.8 area or the 3.1 area again. It's hard to say. You can see 2012 took it all the way up to the 3.9 area again. So that was basically a sideways movement. Yes, we had a fairly decent sell-off, but we were hearing the same sort of rhetoric and garbage down here too, when the euro was this low too, that it was going to hell in the handbasket. And of course, it immediately turned at that point, and headed back up for the remainder of the 2 years, short squeezing the heavy shorts at the time. There's also heavy shorts here at the time. So once again, don't believe everything that you hear. We can see also from the franc that the franc has also made a very nice bearish engulfing candle here, on the weekly chart. So it would signify that it will probably move sideways to lower down towards the trend line, maybe the 55 Fibonacci again, perhaps even the 9.2 area over the next few weeks. Gold, well, as you can see, it poked its head above on the weekly, this minor trend line, so it may move up towards the midterm trend line here, up around 1300 area. That's a distinct possibility. We look at oil. Oil is down almost at the 261.85 Fibonacci from the original move here. Down. Really down. It's continuing to cause an awful lot of margin calls in the oil sector, of course, and all the leverage companies that are, based their entire 2008 recovery on the fact that oil was going to go to 130 a barrel, 150 a barrel again, of course. Since that point that I called the turn in the market up here around wave 2, it has done nothing but plunge way past my target of the 77 level and is now down at the critical levels of 57, and it could move to 40 or even 20. I mean, don't be surprised. Once the debt starts to rerun, margin calls start to happen. This will accelerate. Price action will continue to run through. This is where all the leveraged debt and the big banks are. This is where they all put all their eggs in one basket. For the big recovery. So it could really start a very nasty contagion. We'll keep an eye on that, but that's not necessarily a buy opportunity yet. I'll keep you informed of that, but. Looking at treasuries, we see that the treasury rates are moving up, which means the yields are falling once again, so not a surprise. We should see it continue to move up from here. This is the 10-year treasuries, very liquid market. Japanese Nikkei, we see that it has made a very powerful bearish engulfing on the weekly. Should maybe move down towards the minor trend line here, maybe through it over the next little while. The Nasdaq, same thing. S&P, same thing, which means credit is contracting in the stock indexes, which could be a result of the oil contraction where financial markets are contracting themselves. There's not very much volume in these markets, so it wouldn't take them very much to plunge, a fair amount, if indeed, we're looking at a major contraction of some sort. I don't believe that yet, but once again, it's not that hard for the Fed to pump up the market here because there's not that much volume, but it is in the oil and some of the commodities markets, which, as you know, since May, I've been telling you and watching on the fact that they're falling a lot faster than, one would classify it as being comfortable. The Dow, the same. Every particular index, as you notice, because of the correlations of the fact that U.S. dollars and yen are used as carry trades in these indexes, to hopefully pad profits, that's why they all contract at the same time, It doesn't matter whether it's any stock index around the world, whether it's from the UK to the US to the Asian markets, it doesn't matter. So That's what the correlating markets mean there. Great Britain pound also seemingly has bottomed in the area that I mentioned to you that it was likely to bottom. So we'll see maybe if it doesn't, turn and move sideways to up over the next few months too. Probably it has reached the bottom of its range. Here the Australian dollar. I would look for it to continue down a little bit more, but not much, where we may get a pop back up towards this trend line. Canadian could possibly be topping out too as it's staying within its range. And of course, the US dollar yen, well, it's now made a bullish or bearish, I'm sorry, engulfing candle too on the weekly. That's significant. Remember me telling you about that? It could move down to the 150, maybe even more, folks. So, like I said, don't chase it up here. We're definitely looking at the key currencies that we're focusing on, of course, are the yen currencies this week for the sell-offs. The continued sell-offs as risk contracts a little bit. Risk off this week. Okay, so risk off means the yen will strengthen, right, against the U.S. dollar. Remember, we don't want to be buying. We want to be looking for selling opportunities here. So the key markets, of course, the key currency markets are all in the yen this week, where I'm looking at the Aussie yen, the Great Britain pound yen, the New Zealand dollar yen, the US dollar yen. Those are all the key markets that I'm looking at. So, on that happy note, I will move to the news and we'll look at that too. So, one moment. Okay, everyone, this is the news, for the week, sort of a mixed bag of news from everything from the Chinese data to the Eurozone. We can see that Chinese new loans, they're probably going to crest that data, so I wouldn't look for it to be any sort of major surprise. Maybe cause the Australian dollar to rise a bit, but not necessarily a tradable event. We do know that there's some global contractions in the overall global economy right now, so it doesn't really matter what they do. The proof is the fact that things are not necessarily the greatest right now. Next, we move to Monday. This is all Singapore time, of course, that you're looking at. Monday, December 15th. The Japanese Tenkan and large manufacturers outlook. Okay, that's the only major one, which I don't know if it'll print as well as projections because Japan, as we know, is experiencing some deflationary effects at the moment, although, it's hard to say at this particular moment, but I don't see it being good. Once again, though, I don't know if it'll push the yen up against any particular currencies at this particular time, as maybe a bit of risk is returning to the Japanese yen, as I was mentioning to you earlier. So once again, not necessarily a tradable event. Don't be going long the US dollar Japanese yen on it. As we move to Tuesday, December 16th, there isn't an awful lot other than a bit of Eurozone data, which is medium. German PMI services shouldn't really print too bad. So I wouldn't look for, you could go long on the euro on that particular area. Then we move to the pound consumer price index, with the UK. Once again, should print as expected, maybe slightly below based on last week's data, but once again, should see the pound continue to rise up as the dollar. It's more of a dollar thing, guys, as the dollar contracts a little bit, moves sort of down to sideways choppy. So once again, this will be choppy, maybe not necessarily tradable, but you could sort of take a core position or a long-term long position in the pound at this particular point. Then we move basically to the Eurozone where we have the German ZEW, which is essentially, looks at the sentiment within the area, probably print as expected, maybe slightly below. Once again, it won't cause the euro to do very much other than to be choppy. So once again, you can see that these events, I don't know, this time of year is not necessarily I would be trading it because it's going to be very choppy because of the lack of liquidity. So once again, I'm cautious to tell you to go take positions because I think it's going to result in losses versus gains for you. So Great Britain pound, Bank of England minutes, well, that's going to be, Carney jibber jabbering, and he's going to try to say that inflation is a problem, blah blah blah, and everything else, So, just look for once again, produce a choppy effect on the pound US dollar. The employment change, once again, a very good print last month, so I wouldn't expect it to be that high. So we may see a bit of a difference there. So, once again, it could conceive in normal times I might be tempted to short that, but not right now. Then we move to consumer price index, and we see that once again it should print as expected, so no big surprises there. And then we move to Thursday where we have U.S. Fed summary of economic projections and FOMC rate decision, which won't change, once again. There'll be positive news around the dollar at this point, so we might expect, of course, that the U.S. dollar will chop up if it's been chopping down at that point. That should be the major news of the week. Then we go to the New Zealand gross domestic product. Should print roughly around expected or slightly lower. Maybe if the New Zealand dollar is high, it might be an opportunity to short it, but I'll have to determine that as the week progresses. That's of course on the 18th of December. Then we move down towards the Philly Fed index. Leading indicators, not a major bunch of news. And then, of course, we go on to Friday, December 19th. And we don't have much on Friday until we get to the Canadian Consumer Price Index and Bank of Canada Consumer Core Price Index, which should print roughly as expected. Decent things have been happening out of Canada, but once again, it's been more forcing the dollar. The U.S. dollar has been, or the Canadian dollar has been forced in the opposite direction. More of a result of the central banker policies jabbering than it is anything else, but it will likely move sideways also during the next little while. And that brings us to a close, fellow traders. I wouldn't trade too many of these events this week, even though it may look as though they are tradable. I'm cautious because of the lack of liquidity and the fact that we're just sort of wanting to sort of pinpoint some core positions in correlating markets. And of course, in the news, and that's really all we're doing right now as the trading year winds down. But I'll update you more on the site, and that's it for today. So I wish you well this week. Stay tuned, and I'll post some order flow. We'll post some news trades. We'll post all these sorts of things that'll help us hopefully have a good week before we shut our trade stations down. We'll look forward to a fantastic new year. So anyway, talk to you soon. Have yourselves a great day.